Good evening, everyone. I'll just take a minute to make sure everyone join in the lesson. So we're gonna start very soon. All right, so good evening, Maria. Good evening, everyone. Thank you very much for joining today. And of course, I know some student emailed me like they're on a bank holiday. So few students, they said they're gonna cover from the recorded lesson, and that should be fine. So if anyone missed the lesson, they can always cover from the recorded lesson. And okay, so today we're going to start from chapter number 6. And if anyone, please remind me, have we started chapter number 6 last time? Anything we did, or is just like from the very beginning? I remember we have discussed about dead and click. Is there any activity you have done from here? Have we done any activity, Sadia? I will send you a link, Sepi, and from there you can make your login, and then you can see all the video is there. So should be all right for you. All right, so have we done activity 1? Okay, Sharon, so we can go over again. Okay, so activity 1 is all about the journals, and journal means debit and credit. We have already seen how the dead and click work, but unless the practice is really good, unless the practice is really good, it's gonna be sometimes hard to identify how you basically identify what is debit and what is credit. If anyone joined today, if today is your first class, so make sure you watch the video, the last 2 classes we have done. That will help you to understand, because so many things are connected. So if you miss something at the beginning, make sure you recover this lesson. So you watch the video. We have done 2 classes. If this is your first class, make sure you watch the video. Okay, so let's quickly do this activity once again. Before you start, let's talk about quickly dead and click once again. Yes, Muriel, you can do the same thing. Obviously, send me an email, and I'm gonna send you a link and the email. So hopefully from your EMS account, you can see all the video there. So shouldn't be any problem. Okay, so we talk about dead and click. So for the dead, all I need to remember, D for debit, E for expenses, A for assets, and D for drawings. And on the other hand, we have a click. We have C for credit, We have L for liability. We have I for income. And we have C for capital. When my debt increase, so when my asset, expense, and drawing increase goes up, that time it is debit. When my debt decrease, that means when my asset, expenses, and the drawing goes down or decrease, that time this is credit. On the other hand, when my click increase, that time this is credit. So if my income like sales, if my liabilities like bank loan, if my capital increase goes up, that time it is credit. If this is goes down, if this is decrease, that time this is our debit. So all you need to remember, if debt increase, that is debit. If debt decrease, that is credit. On the other hand, if the click increase, that is credit. And if the click goes down or click is decreased, that time it is our debit. Let's quickly do this activity once again. The first transaction we have. So all you need to do from the transaction means the activity. Transaction means the activity that business do everyday life. So business buy something, business sells something. So from there, business do the activity. So if someone asks you what is a transaction, we tell the activity, daily activity for the business we call transactions. That means the buying, selling, paying the bill, receiving the bank interest, any type of activity business do, this is the transaction. And every single transaction we have to record it in the book in the form of journal. And when I said journal, I mean debit and credit. So let's have a look at the first one. The first transaction we have sales for cash. The first transaction we have sales for cash. Now all you need to identify what is we have here. So you can see here we have two things. We have a sales and we have a cash. So we need to ask ourselves, what is sale? Sale is the income, sale is the asset, what it is. So as soon as I see the sales, I understand sales is income. Remember, sales is the only entity that is income for the business. Sales always bring the income. So sales is the income. So sale is the income. And on the other hand, we have a cash, and cash is the asset. Cash, bank, this type of thing is always our asset. So sales is income and cash is the asset. So we identify the entity, what is income and what is asset. Our next job is to define, is it increasing or decreasing? Because we have to identify what is debit and what is credit. So we can have a look here. If I make a sale, my income will be increased. More I sell, my income will be more. So if I sell more, my income will be more. So when I said sales, so that means my income is increasing. So if my income is increasing, I will check with the click because income belongs to the click. And if my income goes up, this is a credit. So sales will be credit. On the other hand, cash is an asset and asset belongs to the debt. And if the asset, if I make a sale to the customer, cash is coming to the business. So every time I make a sale, cash is coming to the business. So if cash coming to the business, that means asset is coming. And if the asset come to the business, my asset is increasing. And if the asset is increasing, that means debt is increasing. If the debt is increasing, that is our debit. Because if debt increased, this is our debit. If debt decreased, that is our credit. So you can see on the debit column, we said cash is debit. Why? Because increase in asset. On the other hand, we said sales is a credit. Why? Because income is increasing. So that's how we have to identify every single transaction, and we record it in the bookkeeping system in the form of journal. That means debit and credit. The next one we have sales on credit. Now we already know the difference between the sale on cash and the sale on credit. Sales on credit means customer going to pay me later. Sales on credit means customer going to pay me later. So if the customer going to pay me later, I have a name for them. I call them sales ledger control. If any customer said, I will pay you later, I have a name for them. And I call them, you are my sales ledger control. That means you are going to pay me later. So you buy something from me now. You are buying something from me now, but you're going to pay me in future. So I called you sales ledger control, and you're going to pay me in future. So you are my asset. So if I expect any money from my customer because of the credit sale, they are my asset because they're going to pay me some money in future. So they are my asset. So if they are my asset, they are my debit. So sales ledger control is debit because they are my credit customer and they are going to pay me some money in future. On the other hand, sales is income like the previous one. So sales will be credit anyway because that's income. So we said sales ledger control, that is debit because this is a credit customer balance and we're going to receive some money in future. So we call this is our asset. On the other hand, sales is income, so this is our credit. So that's how we have to identify every single transaction. Okay, let's have a look. The next one, number 3, we'll try to do it together. So let's try purchase for cash. The first thing we have to do, we identify how many entities there. So we can see there is 2 entities. One is purchase and one is cash. Then I have to identify what is purchase and what is cash. So purchase is expense. If I make a purchase, my expense gone high. Sometimes some people said, I don't want to make too much shopping because my expense is very high for this year. So you need to remember, you need to understand when I said purchase, purchase is expense. Every time if you buy something, your expense goes up. So purchase is expense. Please make sure your microphone is off because it will start making noise. If your microphone is not mute, that will create noise for everyone. So please make sure your microphone is mute. So purchase is expense. And of course, if the purchase is expense, that comes under debt. So expense comes under debt. On the other hand, cash is an asset. On the other hand, cash is an asset. So of course, we already know it. So from the transaction we have identified, we have expense and we have asset. Our next job is to identify is the expense going up or going down. So you can see here, if I buy something, so my purchase goes up, so my expense goes up. So if the expenses go up, then my debt also going up. So if my debt is going up, so what happened? My purchase will be debit. If my expense going up, my debt is also going up, my purchase will be debit. So we said purchase. We're going to write on the debit section, we're going to write purchase. That is our debit because expense going up. On the other hand, the cash. If I buy something, our cash is increase or decrease. If you buy something, the balance of your cash, is it increase or decrease? So if it is decrease, so our cash is asset, so asset will be decreased. If the asset is decreased, cash will be debit or credit. If the asset is decreased, so cash will be our credit because on the debt, if we said asset is decreasing, that time this is our credit. So you said cash is credit because asset decreasing. Okay, very well done. So the next one we're going to do is purchase on credit. This time we are buying something. Purchase, this is expense, we understand it. So expense going up, but this time we are not paying immediately for that. We said purchase on credit, so I'm going to pay you later. I tell my supplier I'm going to buy now, but I'm going to pay you later. So if I said I'm going to pay you later, I have a name for the supplier. So same way, when we make a sale, and if we receive later from the customer, we call it sales ledger control. On the other hand, if we make a purchase and if we sell to our, if we pay to our supplier later on, we call it purchase ledger control. So sales ledger control is an asset account because we're going to receive some money from the credit customer. On the other hand, purchase ledger control is a liability. Purchase ledger control is a liability because we have to pay this money to the supplier. So if our liabilities increase, if your liabilities increase, that time this is our credit. If the liabilities increase, this is our credit. So we said purchase is debit because expense is increasing. On the other hand, purchase ledger control, that is our credit because liability increasing. These two are very, very careful when there's a sales on credit and when there is a purchase on credit. So there is no immediate receipt from the customer and there is no immediate payment to the supplier. So when we said customer going to pay us later, we have a name for them. We call them sales ledger control, and sales ledger control is a customer balance, and this is our asset because we're going to receive some money from the customer. On the other hand, if we purchase from the supplier, and if we tell our supplier, I will pay you later, so that creates the purchase ledger control account. That's a liability and that's our credit. Okay, the next one we have, very well done, Evelyn. The next one we have, pay electricity bill using cash. So you're paying the electricity bill by using cash. You can pay by cash, you can pay by bank. So electricity bill, so electricity bill is our expense. This is our expense. If I have a more electricity bill, my more expense will go up. So that will going up. So the expense is going up. If the expense is increased, then this is our debit. On the other hand, we have a cash, isn't it? So cash is an asset. And if we pay the electricity bill, our cash will go down. So if I pay the electricity by using the cash, so my cash will go down. So if the cash is go down, if the cash is decreased, so that will be our credit, isn't it? If the asset is decreased, that will be credit. So electricity bill is expense, that will be debit, and cash will be credit. For example, if the question said pay by using bank, then you make the bank credit. Now I'm saying cash credit because cash is going down. If you pay by check, then bank will be go down, or pay by bank, then bank will go down. So I'm going to say electricity debit because expense increasing, and cash credit because asset decreasing. The next one we have receive cash from a credit customer. Remember on question number B, we make a credit sale. Now this customer paying to me. Now this customer paying to me. Remember one thing, debit and credit is like a plus and minus. Debit and credit is like a plus and minus. Debit and credit is like a plus and minus. So if there is a one debit and if there is a one credit, so it's like a plus and minus. So for example, if something is debit, if you want to remove it, you make it credit. If something is debit, if you want to remove it, you make it credit. And if something is debit, if you want to increase it, you make it debit again. Please make sure your microphone is off. It is making noise. If your microphone is not mute, please make sure it is mute. And maybe if I try to mute, you will be removed from the lesson. So make sure your microphone is mute. Okay, so we have we was there. So debit and credit is like a plus and minus. For example, if when I make a credit sale, if my sales ledger control is debit, when I make a credit sale, if my sales ledger control is debit, because this customer going to pay me, and the day the customer pay me, I make sales ledger control credit, so that debit and credit will cross each other. So it will be vanish, because debit and credit is like a plus and minus. It's very, very important to understand, because the credit customer, he will be not credit customer or asset forever, because today, tomorrow, the credit customer going to pay to you. So if the credit customer pay to you, he will not be your asset anymore, and you have to remove him from the asset. So you need to make sure you understand that. On the other hand, the same way, if we pay to our supplier, so when my purchase ledger control, that was liability, that was credit. If I pay to my supplier, I make purchase ledger control debit, so that my liability is finished. Now, for example, if you have a credit customer and if the customer paid to you, and after that, if he still said you are my asset and you are my debit, the customer will not be happy, because you're asking more money from him. He will tell, listen, I already paid. I'm not your asset anymore. I'm not debit anymore. So can you make me credit so that my account will be vanished? So if you want to remove something, you make the opposite entry. So if something is debit, if you want to remove it, you make it credit. If something is credit, if you want to remove it, you make it debit. Okay, so we have a receive cash from a credit customer. So we're receiving cash. So cash is coming, receiving cash is coming. So it's very, very important to understand. So let me check someone microphone making noise. So if you don't mute it, so I need to find it out. Please make sure, yeah. Okay, so I found it. Okay, so please make sure don't keep your microphone unmute, because it takes some time for me to find you and mute you. So make sure you keep your microphone always mute. All right, so you can see here, receive cash from credit customer. Receive cash from a credit customer. So we can see here the cash is coming. If we receive cash from the credit customer, the person we have sold in number B, so he's paying the cash, so cash is coming. So we can say asset is increasing, and that is our debit. On the other hand, we can see the credit customer is not anymore, because he have to go. He already paid the money. So he's not my asset anymore. So my sales ledger control will be credit. So you're going to write here, cash is debit, because asset is coming, asset is increasing, and sales ledger control, that is credit, because our asset is decreasing. So one asset is increasing and one asset is decreasing. Okay, the next one, what do you think, number G? What will be the answer for that? Pay cash to the credit supplier. So I'm paying to my credit supplier. If you remember, on number C, we have a credit purchase. On number D, so you have a credit purchase. Now I'm paying to my supplier. That time I buy from my supplier and I said I'll pay you later. But now I'm paying to my supplier. So what happened if I paying to my supplier? So I'm paying by cash. If I pay by cash, cash is the asset, so my cash will be decreased, so my asset will be decreased, isn't it? If I pay by cash, my asset will be decreased, and my purchase ledger control, that was liability before, now I'm going to make it debit. It was before credit, now I'm going to make it debit. Why? Because this is not my liability anymore. I paid the money, so my liability is finished. So I'm going to say purchase ledger control, that is debit, because liability decreasing. On the other hand, we're going to say cash. Obviously, if I pay the money, my cash will be gone. So asset will be decreasing. The last one we have borrow money from the bank. What happens if you borrow the money from the bank? If you borrow money from the bank, we call it loan, isn't it? If you borrow money from the bank, it is our loan. If you borrow the money, money will come to the business. So we could say cash or bank, whatever you write. You can write cash debit because money coming, so asset increasing. If you borrow the money from the bank, cash is increasing, so cash will be debit. On the other hand, the loan is a liability. You have to pay it back. If you borrow the money from someone, doesn't matter from the bank or for anyone. If you borrow the money, you have to pay this money back. So you're creating a liability. If the liability goes up, your click also going up. So that means that will be your credit. So liability increasing, that will be credit. So that's how we can identify all the debit and credit. And debit and credit is a link to everywhere. As I said, this is very, very important and be tricky as well. So make sure you have spent enough time for the practice and identify how we get the debit and credit. All right. Yes, Evelyn, that debit can be bank as well. That's correct. So if you receive the money on the bank, bank would be debit, or you can, if you receive the cash, cash would be debit. Both you can select, depends what you have in the exam. Okay. Now let's move on to our next topic. That is from the, okay, this is the same thing. We move to the next one. Let's talk about the ledger account. So once we completed our debit and credit, the next topic we have here, that is called making the ledger account. So before we making the ledger account, we have to know how to do it. So let's try to understand what is ledger account. Once we make the debit and credit, for example, I have a cash sale. This is the transaction, cash sale 500. So cash sale 500, and the journal is cash debit 500 and sale credit 500. So cash debit 500 and sales credit 500. This is the journal. So once we done the journal, debit and credit, our next job is to prepare the ledger account. Now the ledger account, sometimes we call it T account. T account. The ledger account means from the journal we transfer every single entry. From the journal we transfer every single entity or entry to the ledger account to find the balance. So before it was only debit and credit. Now I'm going to find one ledger account for one entity. For example, for the cash, I'm going to make one ledger account. So this account will be only for cash. This account will be only for cash. Any payment we have made through cash, any money we receive to the business through cash, it will come this account. Remember, the left-hand side is always the debit side, right-hand side always the credit side. And one more thing you have to remember, debit and credit always will be equal. It is not possible your debit side will be like, for example, 500 and credit side will be 400. No, debit and credit always will be equal. So debit side and the credit side has to be equal. So here, left hand side is the debit side, right hand side is the credit side. So we're going to make one account for cash and we're going to make another account for sale. So let's have a look how we transfer the information from the journal to ledger account. If you understand one, you'll understand everything. So the first thing you have to remember which account we are doing. So let's say we are doing for the cash. So we are in the cash account. So this account, this whole T account, the whole account belongs to cash. So cash is a debit. So I'm going to write in the debit side. Very, very careful. So cash is a debit. I'm writing on the debit side, but I'm writing opposite. What is credit here? The credit is sell. So I'm going to write sell 500. I'm writing on the cash account on the debit side because cash is debit, but I'm writing the opposite. Now the question is why I'm writing the opposite? Because from this account, I can now tell I have received £500 total cash. And if my manager asks me, why did you receive £500 cash? For what reason? I can say because of the sale, I have received 500. So writing the opposite entry or corresponding entry will tell me for what was the reason I have received the money. So that's why we always write the corresponding entry, the opposite entry, because that will make me understand why I paid or why I received. So next one we have sale here. So you can see on the journal, sales is a credit. So I'm going to write on the credit side, but I'm going to write the opposite. I'm going to write cash. Cash 500. So that on the sale as income, on the credit side, I can say I have received 500. And if my manager asks me, why did you receive 500? Because of what? I'll say, how did you receive it? Like is a cash in the form of bank? How did you receive? I can say my income is 500. I receive as in the form of cash. So this correspondence entry, the opposite entry will give me the reason why I'm receiving, how I'm receiving everything. So that's how we can carry on all the ledger accounts. Now we're going to practice the whole question here. We have activity 3. First, we're going to do the journal. After that, we're going to do ledger account for everything. And hopefully, it'll be very, very clear because there is a lot of activity here. I think we'll understand the ledger account after that. Okay, let's start with the journal first. That means identify what is debit and what is credit. Number one, let's do it together. Let's do it slowly, but make sure you understand it. Number one, it says started business by depositing £20,000 into the bank account. So you're starting your business by keeping or depositing £20,000 on your bank account. Remember, when you start the business, at the beginning, we called it capital. So when you start a business, if you need money for that, we called it capital. If you need money, when you start a business, any money you deposit to your bank, we called it capital. So if we start a business and if we deposit the money on the bank, what happens? If I keep £20,000 on my bank account will go up, isn't it? So my bank balance will be increased. My bank balance will go up. So if my bank is increased, my asset is increased. And if my asset is increased, my debt is increased. So if my asset is increased and if my debt is increased, so my bank will be debit. Very well done, Evelyn. So my bank will be debit. So I'm going to write bank. That will be debit, 20,000. And when we start a business, remember that is always capital. When you start a business, it is always capital. So my capital will be credit. Capital will be credit, 20,000, same amount. So bank is debit, capital is credit. Why? Because I'm starting a business, so that's my capital, and capital is always credit because capital come under click. And if my capital increase, if my click increase, that's my credit. On the other hand, If I keep the money on the bank, my bank balance will go up, so that will be up. My asset will go up, so that will be debit. Number two, I have brought goods, that means purchase good. Brought goods for resale and paid 250 by check. So we buy some goods and pay by check. We buy some goods and pay by check. So when you buy some goods, that's a purchase, isn't it? When you buy some goods, that's a purchase, and purchase is expense. So if my expense is increasing, purchase is debit. Very well done. Banu, yes, the purchase is increased. So our expense is increasing. So my purchase will be debit. So purchase debit, that is 250. Now the question is, how did you pay it? We paid by check. So if I paid by check, what happened? My bank balance will go down. If I paid by check, my bank balance will go down. And if my bank will go down, my asset will go down. So my bank will be credit. So my bank will be credit, because if I paid from my bank will go down. Very good. Move to number 3. Okay, on number 3 it said paid rent of 225 by check. So what will be journal for that? I hope everyone can do this one now, because if we paid rent, so rent is expense. So if we paid the rent 225 by check, so obviously our rent is expense, so rent will be debit, and of course we paid by check, so our bank will be credit. So we said rent is debit, that is 225, and paid by bank, because paid by check, that means paid by bank, 225 is credit. Okay, number 3. Now move to number 4. Number 4, we can see sold goods for 657 and customer paid in cash. So we make a sales to a customer and the customer paid to us cash. So what happened for that? If we make a sale and we receive cash, so cash is coming to the business, the asset is coming. So if the cash is coming, asset is coming, so asset is a debit. So we said cash is a debit. Very well done, Banu. So cash debit, that is 657. And why did you receive the cash? Because of the sale. Why did you receive the cash? Because of the sale, because sale is income. And if we make the sale and if our income goes up, or our click will also go up, because remember, sales is the only figure we have, that's for income. Sales is the only entry or entity we have for the income. So if you see sales, you close your eyes and you can say sales is income. If you see the purchase, you can close your eyes, you can say purchase is our 3 kilómetros y 300 aquí hasta allá. As I said, make sure your microphone is please mute, Muriel. So make sure like your microphone is not on, because if you speak, everyone listen, and that is disturbing. Okay, so okay, number 4, cash is debit because we're receiving the cash from the customer, and on the other hand, why are we receiving the cash? Because of the sale. The sale is a credit, 657. Right, number 5, paid rates 135 by check. Paid rates 135 by check. So first we understand what is a rates. Rates is like a council tax. When you're living in a house, you pay council tax, but when you do the business, you pay the same thing to the council, but we called it business rate. It's not a tax. It's not like your income tax or your tax for the business. No, it's a separate thing. Yeah, you pay to the local council, the area you do the business. That's expense for you. So if I paid the rates 135 by check, what will be the journal for that? So rate is expense. So rates will be debit. Rates will be debit 135. And if we paid by bank, our bank will be credit. Bank will be credit 135. Move to number 6. Goods sold on credit to a customer. Goods sold on credit to a customer. J handy for 750. So I'm selling a good, so sell, and to a credit customer. So that means I'm creating the sales ledger control, isn't it? If I'm making a credit customer, if I make a credit sale, and if I create the customer, that customer is going to pay me later on, we called it sales ledger control. So sales ledger control, that is our debit because it's a customer, credit customer account. That's the asset balance because customer is going to pay me later on, 750, that is debit. And sales is income and sales is a credit, 750. Number 7, we have purchase good or brought good for resale on credit from C. Babylton, 450. Brought good for resale on credit from C. Babylton for 450. So we are buying something from a supplier, but we're saying I'll pay you later. So purchasing something, so purchase is debit, is expense. That is 450. And purchase ledger control 450 credit because we're creating the liability. Then the next one we have here, paid wages 75 cash. That's the easy one. Paid wages 75 pound by cash. So wages is the expense and we paid by cash. Cash is the asset. So if I pay wages, wages is expense. So my wages is debit. Wages is debit. That is 75. And cash credit 75. So wages is debit 75 and cash is credit 75. So this is how we need to identify all the journals. So what is debit and what is credit? And once we identify all the journal, then we can prepare our ledger account. So once we can done our journal, if the journal is done, so we can prepare the ledger account now. So from the journal, we're going to prepare the ledger account. So let's have a look how to prepare the ledger account. So journal means debit and credit. So our debit and credit is now done. Now we're going to see how to transfer all the information from the journal to ledger accounts. So let's have a look. Okay, the first account we have here, that is bank. As I said, every single account we're going to make a separate T account. This is looks like T. Have a look. This is a look like T. So you make the T account. Left hand side is the debit side. Right hand side is the credit side. Okay, number 1. So we're doing the bank. So let's have a look. The bank. So bank is our first account. Let's find all the bank and do it here. Okay. Number 1, we need to find only the bank. Number 1, bank is debit. Bank is debit. Number 1, bank is debit. So I'm going to write on the debit side. but
I
I'm going
thought
to
for me
write
to.
the opposite. I'm going to write the opposite. So can you please make sure your microphone is off? Otherwise, I have to remove you from the lesson and you cannot join again. So make sure your microphone is off. That's making a noise for everyone. Okay, so we are here with the bank. So bank is a debit. The first journal, bank is debit, capital is credit. Very, very important topic. So make sure you concentrate. If you don't understand this one, you're not going to understand the next one. So very, very important you understand this one. Because this question will be linked to the next question and all the question you have. So this one you have to be understand very clearly. So bank is debit and capital is credit. So bank is a debit. So I'm writing on the debit side, but I'm going to write the opposite. So I'm writing the capital. Capital. The amount is 20,000. So number one is done. We move to number two. There is a bank here again, but this time bank is credit. This time bank is credit. So I'm writing on the credit side, but I'm going to write the opposite. So I'm going to write purchase. P-U-R-C-H-A-S-E, purchase. That is 250. Then you move to the next one, number three. We have a bank here as well. Again, the bank is credit. So I'm writing on the credit side, but I'm writing this one as a rent. I'm writing the opposite because rent is debit. That is 225. Then we have number four. In number four, we don't have any bank, so we don't have to worry about it. If we don't have any bank, we don't take it. Number five, we have a bank. That is bank credit and rates debit. So bank is credit, so I'm writing on the credit side, but I'm going to write opposite. I'm going to write a rates. That is 135. This is done. And number six, we don't have any bank. Number seven, we don't have any bank. And number eight, we don't have any bank. So no more bank. So all the bank are done. So from the journal, now I took all the transaction or entry that is relevant to bank. Now what happened from here? Try to understand that. What happened from here? You can see here, if your manager asks you how much money we receive on the bank, you can tell we receive 20,000 pound on the bank on the debit side. If you receive the money, you click on the record on the debit side. So you said we received 20,000 pound on the bank. If your manager asks you, why do we receive 20,000? For what reason? You tell this is a capital. Because of the capital, we have received 20,000 pounds. Now, if your manager asks you, okay, then how much money we paid from this 20,000 pound from the bank? So is there any money we paid from the bank? We said yes. How much money we paid from the bank? So he said we paid 250 for the purchase, we paid 225 for the rent, and we paid 135 for the rates. Now, if your manager asks you how much money we have on the bank account now, so we can still calculate that, isn't it? So from the 20,000, if we minus 250, 225, and 135, that will exactly tell us how much money still we have on the bank. So if you have this account as a bookkeeper, so you don't have to access on the bank, you can tell exactly how much money we have on the bank. So this account, this bank account will help us to tell every single transaction we have on the bank. So we can tell our manager, this is the money we have received so far on the bank, and this is the money we have paid. And every single transaction will be recorded in the form of debit and credit so that we can tell every single details. Now, getting the balance, how much money we have on the bank, we have to calculate something, and that is called balance CD. Balance CD. Balance CD means balance carried down. Balance carried down. Balance CD means balance carried down. And We also call this a closing balance. Closing balance. So for example, if my manager asks me how much money we have on the bank, what we do, we find the higher side. Which side looks higher? The debit side is higher. So I'm writing 20,000 here, writing the 20,000 here again, and 20,000 minus this 3. I'm going to find the difference. How much is the difference? So this is the money we have on the bank. So let's do that. That is, thank you, Evelyn. That is 19,390, and we called it balance CD. Balance CD. That means that right now, this is the money we have on our bank account. And remember, balance sheet is the last day of the month. Balance sheet is the last day of the month. So last day of the month. So for example, if my month is May, that will be 31st of May, the last day of the month. Balance sheet is the closing balance, that is last day of the month. On the other hand, this balance sheet will later on move as a balance BD. So balance BD, and the same amount, 19,390. Now balance BD means opening balance. Opening balance. And balance BD is the first day of the next month. First day of the next month. So if my balance CD, for example, if the balance CD is 31st of May, then the balance BD will be 1st of June. So the first day of the next month. Now, this is a very important point to understand. Closing balance means how much money we have for this month as a closing balance. So what was the last balance for this month? And for the next month, how much is opening? Now, for example, if you work for a shop, and if you close your shop tonight, that is 31st of May, if you close your shop tonight, and if you leave 20 pound on the till, let's say you keep 20 pound on the till. So for tonight, this is 20 pound is the closing. For tonight, 20 pound is the closing. But for tomorrow, this 20 pound will be opening, isn't it? So when you come back tomorrow morning, and when you open your shop, you're gonna see the 20 pound, whatever you left yesterday night. So whatever was the closing for yesterday night is the opening for tonight. So this is the one basically we're talking about. So anything is the closing, is opening is the same amount. Closing balance, we called it balance CD. That will be the last day of the month. On the other hand, opening balance, we called it balance BD, and balance BD is the first day of the next month. Okay, so let's move on. Let's do the next one. The next ledger account we have for the capital. Now, of course, you understand we have only one capital. That's not going to be difficult. Let's do that quickly. So let's remove all of this. Okay, the next account we have for the capital. So we can see we have only one capital, that is journal number 1, and the capital is credit. So you're going to write on the credit side, and what we're going to write? Try to understand, everyone. If we have a capital account, this account belongs to capital. So capital is a credit on journal number 1. Capital is a credit. So I'm writing on the credit side, but very, very careful. I don't write his name inside of his account. I will never write capital inside of the capital. So I'll never write the account holder name inside of the account. I never write that. So I'm going to write the opposite. So I'll write bank. Very well done, Farida. So you're going to write bank. The amount is 20,000. That's it. We don't have any more capital. Let's do the purchase. Let's do the purchase. Okay. So let's have a look at the purchase. The first purchase we have on number, wait, is number 2. So purchase is a debit. On the debit side, I'm going to write bank. That is 250. Then we have next purchase. We have number 7. So the purchase is debit. On the debit side, I'm going to write purchase ledger control, that is 450. That's it. No more purchase. That's it. Then we can do the rent account. This is the same thing. You can do rest of the account. It's not difficult. But if you understand the concept, how to do it is very important. Okay, let's do the rent. So we have a rent. Number 3, rent is a debit. So on the debit side, I'm going to write the opposite, that is bank. So the bank amount is 225. That's it. So that's how we can complete all this ledger account. And at the end of the ledger account, you will be able to tell if your manager asks you anytime how much is the rent, you open the rent account. If your manager asks you how much is the purchase, you open the purchase account. If your manager asks you how much was the sales ledger control for this period, you open the sales ledger control account. If your manager asks you how much we have on the bank account, you open the bank account, you tell in detail. So from this account, you can tell everything. It's really nice thing. So from the ledger account, you'll be able to give the explanation of every single entry. And for preparing the ledger account, you need to know how to prepare the journal. It's very, very important. If your journal is not strong, if you cannot do the journal, you'll make a mistake on the ledger account. So journal is the step number 1 for the accounting records. And from the journal, we prepare the ledger account. That is step number 2. All right, so let's move on. Let's have a look what else we have. Okay, rest of the thing you can practice yourself. That's the same thing. We move to the next example. Let's do this one together. Okay. Let's say further practice of double entry bookkeeping system. So we need to do some more practice from this activity 4. The first transaction we have, credit sale 200. What will be the journal for that? Credit sale 200. What will be the journal for that? So what will be debit and what will be credit? So if I said credit sale, so sale is income, isn't it? Sale is income. So that is our credit. And if I make a credit sale, I create the balance that is called sales ledger and control, isn't it? Sales ledger control, very well done. Sales ledger control, that is debit. So the amount is 200. Remember, debit and credit balance always equal. So sales ledger control debit, sales is credit. Effect on the element, we can say asset, increasing, income, increasing. If you have any question, please let me know, but make sure you understand it. Okay, number B, we have cash purchase 150. What will be the journal for that? Cash purchase 150. What will be the journal for that? Cash purchase. So purchase is expense. So purchase is expense. That will be our expenses increasing. Purchase will be debit. And if we pay by cash, if we paid by cash, then our cash will be going, isn't it? So cash will be our credit. Very good. So purchase, debit, cash, credit. The amount is 150. 150. The reason is expense increasing and asset decreasing. All right. Let's move to the next one, number C. Number C, we have credit purchase 500. What will be the journal for that? Credit purchase. So we're buying something now, but we'll pay later. Credit purchase. So purchase is expense, so purchase will be debit anyway. Purchase is debit 500. And because of the credit purchase, I'm creating the liability, because if I pay now, if I need to pay later, if I buy now, if I need to pay later, I'm creating the liability. I have to pay the money, and we call it purchase ledger control. £500, and this is our credit. The reason is expense increasing here and liability increasing here. Okay, the next one we have number D, capital contribution from the owner into the bank account. So owner started some business and they give the capital to the business bank account. So if I keep the money to the bank, my bank will go up, my bank balance will go up, so bank will be debit. So bank is debit 1000, and capital the credit 1000, because asset is increasing and capital also increasing. Okay, then do the next one. We have receipt of a loan into the bank account 2000. Receipt of loan into the bank account 2000. What will be the journal for that? So you receive some money as a loan to your bank account. So what will be the journal for that? Very well done, Tamir. So money coming to the bank. So bank will be debit. $2,000. And of course, loan is a liability. Very well done, Evelyn. So loan is a liability. So loan is a credit. So bank is asset, bank is a debit, and loan is a credit. Because asset increasing, liability increasing. Okay, the next one we have drawings 4,000 taken by the owner from the bank account. Drawings means when the owner of the business, he took any money from the business for his personal use. If the owner of the business takes any money from the business for his personal use, we call it drawings. So drawings is always debit. Remember that. If the drawings goes up, the debt goes up, drawings is debit. So drawings 4,000 is debit. And if the money taken by the bank will go down, isn't it? If you take the money from the bank balance will go down and asset will go down. If the asset will go down, that's your credit. So bank will be 4,000 credit, because drawings increasing, asset decreasing. Okay, the next one we have a repayment of bank loan 5,500. Repayment of bank loan. So you're paying the bank loan. Remember, you took the bank loan before. Now you're paying the bank loan. So loan was before credit. Now you're paying the bank loan. So now you make the loan debit. Because when you take the loan was liability, is a credit. Now when you're paying the loan, so your liability going down. Before the liability was going up. Now you're paying back the loan, so your liability go down. So loan will be debit. Loan 500 debit. And how you paid from the bank, let's say your bank will be credit 500, your bank will go down, because if you pay 500 from the bank, so your bank will be reduced by 500, that is your credit. So the reason is liability here is decreasing and asset decreasing. All right, so let's move on. Then we have a credit sale, £100. What will be the journal for that? Credit sale, £100 credit sale. If you make a credit sale, you create credit customer, and we have a name for them, for the credit customer. We call them sales ledger control. If there is a credit customer, if any customer said I'll pay you later, I call them sales ledger and control. So sales ledger control amount £100, that is debit, that is my asset. And on the other hand, sale is income. Sale is income and sale is always credit. So reason is asset increasing, income increasing. All right, the next one we have payment of wages in cash 350. So we paid some wages, cash of 350. What will be the journal for that? What will be the debit and what will be credit if you pay wages cash 350? So your wages is expense 350, that will be debit, and you pay by cash, your cash will go down 350, cash will be credit. Reason is expense increasing, and asset decreasing. Very well done, Khalid. So the next one we have payment of rent from the bank account of 800. Payment of rent from the bank account of 800. So you pay the rent £800. What will be the journal for that? That will be rent is expense if you pay the rent. So rent is expense. Rent is always debit because it's expense. £800. And you paid by the bank, so bank will be credit because your bank balance will go down for that. So the reason is expense is increasing and our bank is asset and asset is decreasing. So you see, that's how we can do the journal. It's like need a lot of practice, to be honest. It's not something I'm expecting all of you understand at the first go, and you don't have to practice at all. You have to practice this one. Journal is the backbone of the accounting. For some people, it's take a long time to understand the journal. If your journal is good, everything is good. As I told you before, when you work as a bookkeeper, only you have to enter the journal. You don't have to prepare the ledger account. You don't have to prepare the trial balance. You don't have to prepare the accounts. If you know how to make the journal, for example, if any software you use, let's say you use Sage, QuickBooks, Xero, any software you use, if you just tell the journal to the software what is debit and what is credit, rest of the thing will be done automatically by the software. So journal, if you done the journal, ledger and the trial balance will be automatically prepared by the software. So this chapter is tricky. I know so many of you will not get it first time, the journal, how to use the date and click. But if you do some practice, believe me, it's not difficult. If you do a little bit practice, like today, tomorrow, slowly, you'll see if you do the same question again and again, it's not difficult at all, believe me. So all you need some practice. And this is the backbone. You cannot skip it. Any other thing you can skip, but not the journal. So make sure you understand the journal. If you work as an accountant, as a bookkeeper, anything, journal will be everywhere. Okay, so let's move on. This is the end of the chapter, and our planning is not to do 3 chapters today. We're going to do 2 chapters, chapter 6 and 7. We're going to complete the book double entry. That's our plan today, because these 2 chapters is a bit tricky, and obviously we try to do as detailed as possible. So we have done chapter number 6. We're going to see chapter number 7, and this chapter number 7 is also for the double entry for the bookkeeping. This is also double entry for the bookkeeping. So we're going to do this one as well, and today we only do the bookkeeping, double entry bookkeeping, and we'll try to understand how to basically prepare the journals and how to do the ledger account. This is our plan today. Hopefully, like all of you understand, some of you may be a little bit confused, but this is because you need some practice. If you do some practice, if you know how to use the date and click, it's not very difficult to do the journal. Okay, so we're going to do that, but before we start, we'll take a break. And we'll try to finish the lesson earlier. Yes, Shanai, hopefully you're gonna finish a bit earlier today. Yes. And obviously, if you need to go a bit early today because of I know some students didn't join because of the bank holiday, or if you have any plans, so you can always see that lesson later on, the recorded video. Hopefully, that will be fine for you. Okay, we'll take a break. We'll take a 30-minute break. So we'll come back around 7:40, and we're going to start from chapter number 7. And hopefully, we'll do as detailed as possible, and we'll finish the double entry. I'm going to see you in 30 minutes time, but before you leave, please make sure everyone write it down your full name for the attendance. Remember, it's very important to write your name. If you don't write your name, you're not going to have access to the video, recorded video. Some students say they don't get the link because you don't have the attendance. So that admin team don't update it if they don't find you are in the class. So make sure you record your name. I'll see you in 30 minutes time. Welcome back. So we're going to start with chapter number 7 and carry on the double entry bookkeeping. Okay, so let's have a look what else you're going to see from here. The first thing we're going to say that is called balancing of the ledger account. Now this thing we already discussed, but let me explain how it works, the balancing of. So when I said the balancing of the ledger account, that means we are looking for the balance CD and BD. So if the question asks you balancing of the ledger account, that means you need to understand the question asking for balance CD and balance BD. That means the question asking for opening balance and closing balance. Yeah. Let's have a look on the example, then we'll understand more. For example, in this example, this is a ledger account we have for cash. So we have a ledger account for cash. And in this account, we can see this is our total. This is our total. We find the difference. So this minus this gives our balance CD. And this balance CD comes as a balance BD here. So whatever is the balance CD, remember, whatever is the closing balance for the last month or for the last period is opening for this period or this month. So it's very simple how to do the balance CD BD. All you need to remember, for example, for the cash account, yes, I have a 10,000 here, and I have a 1,000 here and 1,000 here. How we get the balance CD? First, we look for the higher side. Which side looks higher? First, we're going to look the higher side. For this question, you can see the debit side look higher. So we write it down the higher side here, and we write the same thing other side as well. But the credit side is not 10,000, isn't it? Here only 2,000. So you find the difference. How much is the shortage here? That is 8,000. This 8,000 you called it balance CD. And remember, the balance sheet is the last day of the month. That will be last day of the month. And this balance sheet comes as a balance BD. So this is very simple. We'll do some example and hopefully you'll understand more. Let's have a look. Let's find the example. Okay, this example you can see this is a complete example for the cash. For the cash. So this is the transaction we recorded from the journal. After that, we look for the higher side. Which side looks higher? You can see this side looks higher, 13,300. So we write 13,300 both sides. After wrote 13,300 both sides, we know here it is not 13,300. We minus all of this to find the balance. And this one will give us
the closing balance. So balance sheet is the closing balance. That is 9,700. This closing balance sheet comes opposite side as a balance BD. That is 9,700. What does that mean? That means the cash balance for the end of the month. At the end of the month, we have a cash balance 9,700 left. How? We received 10,000 as a capital. From the sales, we have received 1,500. From the sales ledger control, we have received 1,800. So total cash we have received that amount, 13,300. So from 13,300, we paid 1,000 for the purchase. We paid 600 for the rent. We paid 500 for the drawing. And for the purchase ledger control, we paid 1,500. So from 13,300, we paid all of this amount. So any money come in, we writing on the debit side. Any money going out, we writing on the credit side. So after that, out of 13,300, after paying all of this, we have this amount left, 9,700. So this is the closing for this month. And whatever is the closing is the opening for the next period. This is very simple. Okay. Okay, so let me maybe explain again. I'm not sure why the voice is breaking. Let me try to explain again maybe. So let me know, is it clear or not? If you can hear me, I can try to speak a little bit slowly so it is better. Let's do one of the example. Let's have a look. So I don't know what to do, to be honest. I really don't know what to do. Better. Let me know you can hear. You can hear me clearly. Please let me know. Is it better now? Okay, let's have a look. This example, activity 1, balancing off. If you still have a problem to hear me, so you can let me know. I can maybe disconnect and connect again. Sometimes there is issue with the internet. Maybe if the internet suddenly becomes slow, then you can hear properly. But hopefully, like it's okay now. Thank you, Farida. So I'll try to speak a bit later, but a bit slow. Maybe you understand it. Okay, let's do this one. Balancing off. Thank you, Luis. So let's do this one. Balancing off. Balancing off means identify the balance CD and BD. Balancing off means identify the balance CD and balance BD. Okay, let's have a look for the cash. So let's do this one and do the cash account. So let's find the balance CD and BD. First thing first, we have to look for the higher side. Which side looks higher between the debit side and the credit side? Which side looks higher? We can see here the debit side looks higher is 1,000. Here it is 350. So we write the higher side 1,000 on both sides. And after that, we minus the shorter side, the lower side, that is 350. The difference will come as a balance CD. So we can see here, 1,000 minus 350. How much will be the balance CD here? 650. That's our balance CD. And this balance CD will come as a balance BD on the other side, 650. What we understand from here, we can say we received £1,000. We received £1,000 because of the sales. From the £1,000, we have paid £300 for the purchase, £50 for the telephone, and we have remaining £650 cash balance. This is the closing balance, and whatever is the closing is the opening. This is a very simple thing. If you understand it, it's not difficult at all. Let's try some more example. Let's move on to the next one. Okay, let's do the bank. So we can see here the debit side looks higher. That is 20,000. You're going to write 20,000 here. You're going to copy the 20,000 here. You're going to find the difference. So 20,000 minus all of this, that will give us balance CD. 19,000. And this balance CD will come as a balance BD. So that's it. Let's move on. You can see all of this. This is a very simple thing. You can do out into yourself. It's not a big deal. Let's move on. The balancing of the next one, activity 3. Balancing of ledger account. The following two accounts are in the ledger are in the general ledger at the close of the business on 31st of August. Okay. And they said the requirement here is insert the balance carried down, that is balance CD. Insert the balance carried down, that is balance CD. This question always in the exam. This question always in the exam. Make sure you have a good preparation for that. Insert the total, insert the balance, drop down. Drop down means balance PD. Let's do this one. So there is nothing on the credit side. So higher side will be the debit side. How much is the total here? 4265 plus 245. So you need to find the total. The total is 4510. Thank you, Lynn. So 4510. You're gonna write the same thing, both sides, 4510. After that, we have nothing here on the credit side. Our balance CD will be balance CD will be 4510. And can anyone tell me what will be the date here? The balance CD. This is the month of August. So for the balance CD, the date will be the last day of the month. So balance CD is the last of the month. So we are in August. So balance CD will be 31st of August. It's very important. Remember this one. Balance CD is the last day of the month. And this same balance CD will come as a balance BD here. Balance BD, same amount. And the balance BD will be what date here? What did you going to write for the balance BD? Balance BD will be the first day of the next month. So we are in August. So first day of the next month will be September. This question always in the exam, I'm telling you, that's for the 8 marks question. So make sure you know it very well. Just to get the balance CDB. It's not difficult at all. Okay, let's do this one. Can everyone try that? This time around. So how much is the total here? First you need to get the total. That is 2800, yes. So 2800, you're going to write the total, and you're going to write the total on both sides. So you're going to write total on both sides. And you're going to write the balance CD here. How much will be the balance CD? Same amount. Nothing is here, so balance CD will be same. That is 2800. And after that, this will be our balance CD. 2800. And the balance CD, the date will be the last day of the month. That is 31st of August. Balance CD, 1st of September. Same thing, but all you need to do, you want to remember the date. Balance CD is the last day of the month. Balance CD, the first day of the next month. Very well done, Sharon. So let's move on. Let's have a look what else you have in this chapter. Subsidiary ledger. Okay. Let's have a look at the next example. Okay, activity 4. In activity 4, we said recording the transaction in the sales and the purchase ledger. The sales ledger is a customer account, again like a T account. Sales ledger for you have a customer. Let's have a look at. So we make a two T account. You can see it here. One is sales ledger, one is purchase ledger. Sales ledger is when you make a credit sale. Purchase ledger is when you make a credit purchase. The following two transactions have been entered in the general ledger as follows. Sold good on credit to a customer, J. Henry, 750. This is our credit customer. So we're going to make the sales ledger for J. Henry. So we're going to write sales ledger for J. Henry. So for every single credit customer, we'll make a separate sales ledger account. Every single credit purchase or credit supplier will make a separate account for that. So the next one we have purchase good for resale from a credit supplier C. Babington 450, invoice number 8801. Okay, so you're gonna make a purchase ledger that for C. Babington. Okay, let's do the first one. So sales ledger. So sales ledger control is a debit. J. Henry is a credit customer, so that is a sales ledger control. So you're gonna write on the debit side, but we're going to write the sales invoice. Remember, when I make a sales, I'm going to write the invoice number as well, so that I can track the invoice, like for which invoice. The reason is you might have the same customer and he might order so many invoices. He might buy so many times from you. You might have a supplier and you can buy so many times from the same supplier. So you need to know for which invoice you pay, which invoice is already paid and which invoice is outstanding. It's very, very important. So write the invoice number here. Invoice 346, the amount is 750. And on the other hand, for the C. Babington, we can see is a purchase ledger control account. So that's the credit. On the credit side, I'm going to write invoice 8801 and the amount is 50. That's it. Just the same thing like that way we did before the ledger account. Nothing new, but this time we're writing. Have a look at this one. So all you need to do on the J. Henry account. J. Henry is our credit customer, isn't it? So he's our asset. So we will tell J. Henry you have to pay me some money. For which invoice? Invoice number 346. Amount is 750. So from the J. Henry, we're expecting 750 pounds, and that's on the debit side because J. Henry is our asset. He's going to pay some money. On the other hand, C. Babington is our liability. Is our supplier. We need to pay some money. For what? For the invoice. So we're going to have invoice number 8801. We need to pay C. Babington 450 pounds. That's our liability. That's our purchase ledger. So sales ledger means customer balance. Purchase ledger means supplier balance. That's the only difference. All right, so let's move on. The next bit we're going to see that is called accounting equation. Accounting equation means how we end up with the total money invested for the business. For example, if I said I started a business and I have invested 10,000 pounds. So 10,000 pounds I have invested for the business. This 10,000 pounds, it is possible maybe all the money is not invested by me. So some money I borrow from the bank, or maybe some money I have invested from myself. So this is my total asset for the business. If I have invested total 10,000 pounds for the business, so 10,000 pounds is the total asset for the business. If I have invested total 10,000, 10,000 is the total asset for the business. Inside of the asset, I have two things. I have a liability and I have a capital. Liability means maybe some money I have borrowed from the bank or from other people, let's say £5,000 is my liability. So this money I have borrowed from the bank, and I have invested 5,000 from my pocket. So liability plus capital exactly equal to asset. So asset means how much money total you have invested for the business. If I have invested total 10,000 for the business, how do you end up with 10,000? Why did you get this 10,000? So maybe 5,000 you took loan from the bank. This is your liability. And 5,000 pound is from your pocket. This is your capital. This one you have to remember this formula: asset minus liability equal capital. And if you remember this formula, asset minus liability equal capital, it could come anyway. You can say asset equal liability plus capital. So if I added these two, that will give me asset. If I minus asset minus liability, that will give me the capital. If I said asset minus capital, that will give me liability. Same story. So if I want to come here to the asset, I can add these two, capital plus liability. If I want to find the capital, I can say asset minus liability. If I want to find the liability, I can say asset minus capital. Because they will give us two in the exam, we have to find the third one. But if you know how to do it, it's not difficult. This asset is the total, liability and capital together is equal to asset. If I know the formula, asset minus liability equal capital, it's not difficult. Okay, let's do some examples and let's find it out. So our equation was asset minus liability equal capital. That was the accounting equation. This is called accounting equation. You have to memorize this accounting equation. Let's do some practice. We are in activity 5. Let's do activity 5. On the activity 5, it says, are the following statement true or false? Okay. The first one, they said asset plus capital equal liabilities. Asset plus capital is liabilities. So is it true or false? Asset plus liability, is it asset plus capital is a liability? Our accounting equation was asset minus liability equal capital. So asset plus capital is not liability. So this is basically false. Let's say this is false. The next one, they said capital plus liability equal asset. Capital plus liability equal asset. So is it true or false? Capital plus liability is assets is true because our asset is the total, isn't it? Asset breakdown of two things, liability and capital, isn't it? Adding these two gives the asset. It is true. The next one is says capital equal asset plus liability. So capital means asset plus liability. Is it true or false? Capital equal asset plus liability. This is not true, isn't it? Capital cannot be equal to asset plus liability. Capital is only one. Asset is only the total. So we say this is our false information. This is not true. All right. Let's do the next one. It says if liability total is 36,000 and capital is 84,000, what will be the amount of asset? So if my liability is 36,000 and if my capital is 84,000, how much will be the asset? So if you know the equation, that is capital plus liability for asset. So all you need to do, you need to add the capital and the liability. That will give us the asset. So we'd say, how much it is, Farida? 120, okay. 120 is our asset. This asset is the total for the business. Inside of the asset, we have it. The next one, number 2, is says if asset is 80,000, liability is 64,000. How much is the capital? If the asset is 80,000 and the liability is 64,000, how much is the capital? Know the formula: asset minus liability equal capital. From asset, if I take away any one, it will give me the other one. So asset minus liability, that is the capital, and it is 16,000 Florida. Okay. Very well done, Sharon. 16,000. This is our capital. Okay. The next one we have, if capital is 56,000 and asset is 108, how much is the liability? Let's say the capital is 56 and the asset is 108,000. How much will be the liability? The liability, we know asset is the total. So we take out the liability, we'll find our liability. So if we take out the capital from the asset, we end up with the liability. Well done, Maria. So it is 52,000. Okay. There will be 4 marks question from the accounting equation, 4 marks. So hopefully if you know the accounting equation, you'll get easy 4 marks. Okay, so let's move on. So there is a different format for the accounting equation. Accounting equation can come differently as well. So here, let's say the accounting equation, Silver started a new business, JE, on 1st October with the following asset and the liability. Following assets and the liabilities. So you have the following asset. Let's identify what is asset and what is liabilities. The first one, they said motor vehicle. What it is? Motor vehicle, is it an asset or it is a liability? We need to identify first what is asset and what is liability so that we can do our accounting equation. The first one is motor vehicles. So motor vehicle is asset, everyone happy with that. Then the next one we have loan from the bank. Loan from the bank, what is it? Loan from the bank, so it is a liability, you have to pay it back. This is a liability and you have to pay it back. This is the liability. Then we have inventory. Inventory is the stock. Inventory means the stock. So for example, if you make a product and if you cannot sell everything, whatever is left over on the stock, we call it inventory. For example, if we make 100 pen and if you can sell only 50, another 50 on my warehouse, we call it inventory. An inventory is asset. And cash at bank, so the money you have on the bank, what is it? This is our asset. That's it. So after that, let's have a look. What is the question here? The question here is asset, liability, and the capital. Okay. Let's do this one. Let's make it a little bit smaller. Okay. So, and we get the equation. And let's get how much is the total asset, how much is the total liability, how much is the capital. This one, our asset, liability, asset, asset. So we added all the asset, this, and this. We're going to write on the asset column. So, okay, Banu, 46,120. And from the asset, after the asset, you're going to find the liability, and we have only one liability. 15,000, okay. And if we have asset and liability, you can find the capital easily, isn't it? So asset minus liability is the capital. So if we have our asset now, if we have our liability now, we can get the capital, isn't it? How much is the capital? Capital is 31,120. Well done, Khalid. So capital. So this is one of the way you can see the question in this. Alright, let's move on. Let's have a look. We have one more question here. We have again one question for the accounting equation. Let's categorize that once again. So we have a motor vehicle, that is asset, you already know. We have a loan from the bank, that is liability, you already know. Inventory is asset, you already know. Cash in bank is asset, you already know. There is two new. Trade receivables. Trade receivables means credit customer or sales ledger control. Credit customer, trade receivables, and the sales ledger control is the same thing. Trade receivables, the sales ledger control is the same thing. Both are the credit customer. They're going to pay some money to you. They are your my asset. Both of them going to pay some money to me, and both of my assets. So trade receivables is my asset, and on the other hand, trade payable is the purchase ledger control. That means we have to pay some money to the supplier. So you buy something on credit and you have to pay some money to the supplier, and that is called purchase ledger control. That is my liability. As soon as I can categorize what is asset and what is liability, I can easily find it out by accounting equation. So let's add all the assets. So we have asset, 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 and we have two liabilities. So add all the asset please. After that, get the liability, and we can find. All right, so the asset is 52. This is my asset. How much is the liability we have? We have two liabilities. One is loan from the bank, and one is the trade payable. 16,530. And if you have both asset and liability, minus that you can get the capital. And the capital is 16,530. Very well done, Evelyn. So 16,500. That's how we can find our capitals. All right, so now we think you understand how to do the calculation. Hopefully, if this question comes in the exam, it will be in the exam. So the next topic we have, that is capital and revenue expenditure. Capital and revenue transaction. Now, the difference between the capital and the revenue is revenue transaction. Revenue transaction is basically item for the P&L account, that is profit and loss account. All the revenue transaction go to profit and loss account. On the other hand, all the capital transaction goes to balance sheet or statement of financial position. So we have a two set of account. One is profit and loss account, and one is statement of financial position or balance sheet. So all the revenue expenditure or revenue income that is relevant to profit and loss account, and the capital expenditure or capital income relevant to balance sheet. Let's find the definition. How do I identify what is revenue and what is capital, and when it is income and when it is expenditure? So be careful with that to understand. So I'll give you a very simple definition. If business make an expenditure, if business makes any expenditure, so if business paid any money or anything for the asset, and if the business expect they will use it more than 1 year. So if more than 1 year, that is capital. For example, if the business buy a car, if the business buy land and building, if the business buy a motor van, all of this the business expect, like chair, table, like a projector, like a computer. If business buy anything, and if the business expect they will use it more than 1 year, this is a capital expenditure. It's a capital expenditure. And if the business sell this capital asset, if the business sell this asset, sell the capital asset, we call it capital income. So any asset, if business buy, and if we expect we're going to use this asset more than 1 year, then this asset is a capital expenditure. And if we sell this asset, for example, if you buy a motor car, if you buy a motor van, then this is a capital expenditure. On the other hand, when you sell this van, it is a capital income. So more than 1 year is a capital, less than 1 year is a revenue. So if anything is less than 1 year, let's say less than 1 year is a revenue. If I sell it, for example, if I sell a goods, for example, sell goods, so we expect, if I make a credit sale, we're expecting the money we receive within 1 year. So this is our revenue income. Revenue income. If we do the repair and the maintenance, if we pay for the insurance, so if we expect the money we have to pay within 1 year, for example, purchase a raw material. So if you buy something, for example, from the credit purchase, if you buy something and if you expect you have to pay within 1 year, this is a revenue. So this is a revenue expenditure. So all you need to remember, if any asset or anything business received and expect they're going to hold it for 1 year, that's a capital. If this is a purchase, that's expenditure. If they receive the money, that's income. On the other hand, less than 1 year is the revenue. If there is a paying, this is expenditure. If they receive, that's income. Let's have a look at some example so that will be more clear for that. So I read this definition that will help us to understand. Revenue expenditure. These are the ongoing expenses which the business must interoperate in day-to-day activities. Revenue expenditure is the day-to-day activities. For example, you pay for the rent, electricity, repair, all of this. So you need to pay day-to-day basis. You don't hold it for a year. It's a revenue expenditure. Capital expenditure, when you buy something and expect you can use it more than 1 year. For example, machinery, vehicle, office equipment, all of this. This is expenditure. Expenditure means when you buy and you pay. Expenditure means when you buy and you pay for that. On the other hand, we have income. Revenue income means when you sell something and you receive the money. And you receive the money within a year, isn't it? So when you make a credit sale, you expect the customer going to pay me after 1 month, 2 months, within a year. So the majority of the business income will be generated from the sale of goods, the provision of the service. This will be classified as a revenue income. So when there is sales, and you receive the money, so it's income. What type of income? Revenue income, because this income will get within a year. On the other hand, we have a capital income. So we have a capital expenditure and revenue expenditure. We have a capital income and the revenue income. Expenditure is when we pay, we buy something. Income is when you receive. So capital income is when you sell something that we could have been used more than 1 year, like land and building, any capital asset, computer, motor vehicle. If we sell anything, and if we receive the money, that is a capital income. And one more thing, if the owner of the business invests any money on the business as a capital, we expect we're going to keep this money more than 1 year. This is our capital income as well. So if the owner introduces any money to the business, that's a capital income. And if we sell any asset, capital asset, this is a capital income. Okay, so let's have a look. Let's do an example. Okay, activity 8. Let's do this one. Capital and revenue income and expenditure. Select one option in each instance below to show whether the item will be capital expenditure, revenue expenditure, capital income, or revenue income. Is it a capital expenditure or revenue expenditure, or capital income or revenue income? Let's do this one together. The first one, they said purchase. As soon as I see the word purchase, I understand this is an expenditure, isn't it? As soon as I understand it is a purchase, I understand the money is going as expenditure. Now I need to find it out what type of expenditure it is. So I purchase raw material. Raw material is like For example, if I want to make a bread, my raw material will be the flour. If I want to make an ice, my raw material will be the water. So raw material, if I buy the raw material and I expect I'm going to use it, I'm going to pay for that within a year, isn't it? That's my revenue expenditure. If I buy the raw material and expect I'm going to use it within a year, I'm going to pay for that within a year. I'm not going to hold it beyond. So this is our revenue expenditure. Number two, receipt. As soon as I see the receipt, that means it's income. Because I'm receiving now. As soon as I see the word receipt or receipt, that's income. What type of income? Sale of unused machine. I sold a machine and I received some money. And the machine, I know that's a capital asset because machine I can use more than 1 year, isn't it? So machine is the capital asset, and if I sell the capital asset, an income is come as a capital. So this is it, capital. Next one we have number three, sale of goods. We credit customer. So sale of goods is income. When it's coming, sale of goods is going to be the income. Now, what type of income? Capital or revenue? We credit customer. When I make a sale, I expect we're going to receive the money from the customer within a year. We don't sell someone, we say pay me next year. No. So we expect the money will receive within 1 year. So we say this is our revenue income. And the last one we have purchase. Again, this is the purchase, that's the expenditure. What type of expenditure? What is a motor vehicle? So I buy a motor vehicle. There's expenditure, I know is a purchase. What type of expenditure? It is a revenue or capital. So the motor vehicle, I'm expecting I'm going to use it more than 1 year. It's a capital asset. So if I buy capital asset, it's a capital expenditure. This question will be in the exam, so it will be almost 8 marks question. So make sure you understand. It's not going to be the same thing coming in the exam. They'll give you the different thing. But if you know the logic, you can get the right answer. All right, so that's it. This is the end of the chapter. You can see. So we'll finish today. We're not going to start a new chapter. Let's have a look at the next chapter we have. Maintaining a cash book. So next week we're going to start with chapter number 8. That will be maintaining a cash book. So this is a very important chapter. If you have a time, you can read this chapter in advance. That will help you to understand in advance. Otherwise, make sure this chapter number 6 and 7 we have done today. Please make sure you revise this chapter because these two chapters is very important because the double entry is there. This two chapter is very, very important because the double entry is there, and the double entry is the backbone of the accounting. So if your journal is not good, everything will be like messed up. So make sure you when you read this chapter number 6 and 7, you read very slowly, do all the practice so that you are very good to identify your debiting. Identify that. That's going to be really, really good. So I would say, like, please make sure this lesson, chapter number 6 and 7, revise again and make sure you're clear with the dead and click and how to identify your and yeah, our exam will be like, for example, next we are in next week we're gonna do maybe chapter 8 and 11, 12. Let's say 2 more class we have to complete our books. So we're gonna complete the books in next 2 weeks time. After that, we will do a mock exam, and after the mock with the revision, then after that we will do our final exam. So we can say in 4 weeks time we have exam. After 4 weeks we have a final exam. All right. So please make sure we revise the chapter number 6 and 7, what we have done today. And if you have any question, you have my email address. You can email to me. I'll explain to you. Hopefully, if you do some practice, try to do in writing, try to do in the paper. Because if you just read it, you will if you write it down in the paper, when you do some question, open the example and try to do yourself, it will help you to remember it for long. Then now the mock exam, Luis, we're going to do in a center. So on the exam, for the mock exam, I'll tell you this will be the mock exam. So you have to come to the center. Either you have to come Barking if you live locally, like if you live close to East London, or if you live close to the West London, then you can go to the Park Royal. So I'm going to send you the email, send you the timing of everything. So you have to go that time. You sit on the computer, you do the mock exam, like the real exam. And after that, week after you do the contest. It's not going to be online. It will be like on the same. All right. If you are from outside of the London, obviously, like obviously, we don't have any branch in reading. You can try some practice. Like you can do one thing. You can. I'll send you some links so you can do some practice exam from the AAT website. I'll show you how to do it later on. So maybe you can practice that. So you don't have any center in Reading or Newcastle. We have a center in Birmingham. Yeah, so if you're close to Birmingham, you can go there to the mock exam. Otherwise, only London we have a center for the mock exam. But if you live far, you can do the online practice. And later on, before the mock exam, I will tell you how to practice from that. Peter, for you, if you live in Northern Ireland, so all you need to do, you need to book exam next to your place. So if you find the exam center, you can book the exam center there. And the mock exam for the practice, I can tell you. The AAT have exam center almost everywhere. So if you type AAT exam center, all you need to do is to write it down your postcode, and it will tell you the nearest exam center. Hopefully, like you can all right. So before the final exam or before the mock exam, if you leave obviously far, I can tell you how to do some practice from the AAT online practice assessment. But of course, like before that, we have. I'll try to upload as soon as possible. Maybe I'll try to upload it by Friday, all the video. But I think the last two videos are already up to date. Maybe this video, you need to wait 1 week to see the. I'll try to do it as soon as possible. I'm not sure if I'm around for some reason. Okay, please email me if you cannot hear me really well. To be honest, like I don't know what is the issues today, and maybe you can email me if you have any question. If you didn't receive the email, please make sure, like, if you don't receive the link at least the day before, you can always remind me. So you give me the email, and I'll definitely like get back to you. If you are not received the email, the link, that means you are not added on my list. So please make sure you send me an email. Obviously, like I can add you on my. Well, so my email address. Let me write it down. My email address. That is Sakib at make sure if you don't receive the link at least day before by Sunday, you need to email me so that I can add it to you. We'll do that, Jody. We're gonna the video is already there, but I'm gonna upload to this class as well so that you can see that. All right, guys. So yes, of course. Like I'm gonna upload the video so that you can see that on the EMS. Okay, so I'm gonna see you next week then, same time, and please make sure you revise chapter number 7 and 8. If you have any question, let me know. I'm sorry about the sound quality. I don't know what's happening today. Hopefully, like the recording will be fine. If you have any question, please email me. I will definitely explain. Thank you, Jody. Thank you, everyone, for joining me today. I will see you next week, same time, and wish you a wonderful weekend. And I'll see you next time. If you have any questions from chapter 6 and 7 in your Sharon, please let me know so I can explain. I'll see you next week.